So today at noon, October 14th, 2025, what happened? The Dow Jones went from minus 400 up 200. We had mortgage rates go from being up to being down. What happened? Well, it's not Federal Reserve coming out saying they're going to cut rates more. It's actually better than that. They're coming out and saying that they're going to stop quantitative tightening. So how does that going to affect these things over through here? Well, if you're a homeowner, is this going to help you out? If you're a home buyer, well, hopefully this is good news for you guys as well. So my name is Dan Frio. Today's goal is to help you guys understand what's going on with these and the whys behind it. So here's what happened today. This afternoon, Federal Chairman Powell came in and he said, well, we're going to continue to cut rates, but we're also going to stop quantitative tightening. So what happens is, well, we have to take a kind of a rewind back. What happened back in 2020 that really pushed rates down to the 2% level that we've never seen in history? Well, the Federal Reserve came in and they stepped in. They started buying mortgage bonds in the tune of $40 billion a month, buying bonds. So what would happen to a bond? What would happen to anything if you had somebody coming in buying $40 billion worth of it a month? Well, they drive up the prices. What happens to mortgage bonds when the prices go up? Well, rates come down. So that's what happened during the Federal Reserve's jaunt of coming in and buying up the market. That's called quantitative easing. They're going into the market, buying it up and bringing down rates to help the markets. So then after COVID, they're like, okay, inflation's too high. We did a little bit too much. So now we have to quantitative tighten. So what they did is they increased rates, but not only did they increase rates, what they did is they started selling those bonds back into the market. So now you have more bonds hitting the market than otherwise we would have, especially with the $37 trillion debt that we have. So what happened to bond prices? Well, they plummeted. What happens when prices of bonds plummet? Well, rates go up. So that's what happened today at noon. So let's dive into this. One key element that we really have to focus in on how low rates are going to go. We're going to follow the 10-year Treasury. Now, the 10-year Treasury, if it stays below 4% and stays there for a few days, we might see a nice little rally into the bond market, causing rates to come down even further. So to explain all this, let's go over to Rick Santelli, my buddy over at CNBC, so he can explain to you guys what's going on with the 10-year Treasury, why it's important, and what the Federal Reserve saying, how this is all going to affect rates.
And the bond report, Rick, that 10-year Treasury, that yield is like a cat whisker above 4%.
And it seems to always be a cat whisker above or near 4%, and then it seems to move away several occasions. And why is this so important? Well, Brian, I'll tell you, 4% is a huge psychological level, and the Fed could talk about manipulating and quantitative easing and SOMA, but in the end, the market has a voice. Look at the April 10-year chart. And the reason, of course, is because that's the low yield close of the year in early April, basically right at 4%. And, well, if you look at the intraday chart, we touched it a little after 6 a.m. in New York. We touched it briefly on September 19th. And every time we seem to touch it, it seems to move away from it. But notice the scaling here. What is the range? Basically 5.5 basis points today. Now let's pair the Dow on top of that, which currently has about a 1,100-point range against the 5.5 basis points in tens. My point here is that all this volatility in equities isn't translating to much volatility at all in treasuries.
So we have a bond market that's kind of being a little sticky right now, but the good news here is if you look over to here, here's what we had happen today. This is the mortgage bond. I want to show you right what happened midday when the Federal Reserve came out and actually said what he was going to say. Here's where the market started. It dropped all the opening bell. It dropped. It was down about 20 points. This means mortgage rates are going up. Okay, so what happens is it's stabilized. Then all of a sudden, what happened around noontime, we got that news from the Fed. And then what happened? Boom, 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 boom. And these little orange dots right here, you can see where it says better, 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 better. What that means is mortgage rates are getting better with the lenders that we're working with at this time. So this is good news for mortgage rates. How low are they going to go? Well, that's what we're going to focus in on each day to kind of explain to you guys what's going on with these and the whys behind it. So let's get over to what the Federal Reserve is expected to do at the next few meetings. To find that out, we're going to go to the CME FedWatch group, and this is where Rick Santelli does most of his broadcasting. And what they do there is they take the futures markets and they figure out what is the Federal Reserve going to do in 14 days. Well, we go down through here. let's look at the probability, and it's basically, I guess I'll say funny at this point. We have the October 29th meeting. There is basically a 100% chance the Federal Reserve is going to cut. And now this is also telling us that the December meeting, they're going to cut as well. So it looks like the Federal Reserve is going to be on a tangent of cutting rates. But as we know, that doesn't mean mortgage rates are going to come down. We're really going to focus in on is where that Treasury yields are taking us. And if that can close below 4%, I think it's going to be good news for mortgage rates. So if you want to be prepared for this, if you're looking to buy or refinance, well, reach out to us on our website. My name is Dan Frio. I do this report each day to help you guys understand what's going on with mortgage rates and the whys behind it. I also have a slogan. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. Now, how do we do that? You're going to have to check out this video right through here. Each Wednesday, I come out and do a live event to show you exactly how we do this and why we do it. And folks, so the conclusion of this is mortgage rates are probably going to get a little bit better over the next few days. But if you're sitting on the sidelines waiting for that perfect rate, I got a tool for you. Go to the rateupdate.com. Here's our website. Check out RateWatch 2.0 if you want to find out or put in your information on when you'd like for me to reach out to you when rates hit a specific percentage rate. So let's say, for example, you're at 7.5 and you're like, Dan, when rates hit 6.5 or maybe 6, reach out to me. That's what's going to happen. So fill out your RateWatch tool to make sure you hit that next time that rates drop. You get an alert from yours truly. Thanks for watching, folks. If you'd do me one big favor, if you can subscribe down over below there. I'm trying to hit 40,000 subscribers this month. Only you can help me. Thanks for watching. See you back here tomorrow at the opening bell to see how this mess starts another day. See you then, folks. Take care. Bye-bye.